Welcome to the next session on GST class. Today we'll try to understand what is the dual model under GST. Let's start. The dual GST model, it refers to the concept where both the central government and the state government, they come together jointly and they levy the tax on the supply of goods and services while the administration is run separately. Though we have the central government and state government separately, they both come together to levy the tax on the supply that is made in particular state. It is dissimilar. This is different from the single national GST model where there will be only one GST throughout the country. That is different. Where the taxes are levied only by the center involving sharing such revenue with the provinces or states. It is adopted in the countries such as Australia. And this is also different from the single state GST model where the state exclusively have the right to levy and collect the taxes. This happens in the case of USA. So now let us understand when are the taxes levied. So under GST we have two types where if the goods are moving from one state to the other, we call that as interstate movement, and in that case IGST would be charged. IGST is integrated goods and service tax. And if the goods are moving within one particular state, both the central government and state government come together to levy the tax. In that case, CGST and SGST would be charged. CGST stands for Central Goods and Service Tax, while SGST stands for State Goods and Service Tax. The dual model of GST in India. Let's understand what is the dual model. The dual model or the dual GST structure means levying tax with two different taxation components. We have two taxation components of CGST and SGST. In India, both the central goods and service tax and the state goods and service tax are the components levied on single transaction within one particular state due to its federal nature. It is because of the federal nature of India, both state government and central government, they jointly levy the tax on any particular transaction that is happening within one particular state. In other words, under the dual GST structure, both the central and the state government, they can charge and collect taxes through their appropriate legislation. What are the features of dual GST model? What would be the feature? First thing is GST has two components. As we have seen, GST, it has two components. One is CGST and the other is SGST or UTGST. Now, if the transaction is happening within one particular state where the central government and the state government, they jointly levy tax. In case if the transaction is happening in particular union territory, in that case, the tax would be levied by the central government along with the union territory government. In such case, SGST would not be charged. It is UTGST, that is Union Territory Goods and Service Tax, that would be charged. Central Goods and Service Tax and the state GST would apply to all the supplies of goods and services. So the CGST and SGST is applicable for supply of goods and also for the supply of services. For supply of goods and services, both GST would be applicable. The amount collected as CGST and SGST must be individually deposited to the center and the state's account. The amount that is collected as CGST should be deposited in the center's account, and the amount that is collected as state GST, that should be deposited to the state's account. The central GST and the state GST must be treated independently. The CGST and SGST, it has to be treated separately. Further, the taxes paid against CGST towards the intrastate transaction shall be allowed as the input tax credit against the IGST charged on the interstate, where we have this option of availing the input tax credit. That is the tax that is already paid on the purchases. We can claim those taxes that we have already paid. So any of the taxes that is paid under CGST can be claimed under SG. It cannot be claimed under SGST, but whereas we can claim it under IGST. In same way, any of the taxes that is paid as SGST can be claimed towards SGST and IGST, but it cannot be claimed as under CGST. Now let's understand what is UTGST. As we have seen, UTGST, it stands for Union Territory Goods and Service Tax. It is very much similar to how the SGST, it is levied by the state government on the intrastate supply. What does intrastate supply mean? Any of the supply that is made within one particular state, we call it as intrastate supply. The UTGST, it is levied on the intrastate supply of goods and services. UTGST is levied by the handful of union territory governments. The UTGST would be levied by the union territory governments. It refers to the tax levied on intra-union territory supplies. If it is intra-state supplies, it is where the CGST and SGST would be applicable. If it is intra-union supply, then it is CGST and UTGST that would be applicable. It is governed by the UTGST Act. We have Union Territory Goods and Service Tax 2017, and this would be applicable if the transaction is happening within one particular state. And it is amended from time to time. Next, let's understand what is IGST. So, if the transaction is happening within one particular state, we have seen that the CGST and SGST would be jointly levied and collected from the supplies. In case if the goods are moving from one particular state to the other, or the service provider from one particular state, he is rendering service to the other state, it is where the IGST comes into charge. The full form of IGST is Integrated Goods and Service Tax. Under GST, this IGST is a tax that is levied on all interstate supplies. What is interstate supply? The supply that happens between two or more states, we call it as interstate supply. That is supply outside one particular state, we call it as interstate supply. On all the interstate supplies of goods and or services or across two or more states or union territories. The supply, it can be either between two or more states or union territories, and the supply can either be of goods or services or combination of both. Further, the IGST levy and collection will be governed by the IGST Act 2017. Here, the power to collect the IGST, it rests with the central government. The tax, once collected, it will be shared between the central and the state governments. So, what is the benefit of dual GST model? The total number of taxes levied by the central and state government reduces. As we have seen that the introduction of GST itself, it has reduced the number of taxes that is levied. So, with this, the taxes that is paid by the businesses as taxes, it is all reduced. The effective tax rate for different goods gets reduced. And then this model helps in eliminating the cascading effect of the taxes. What is cascading effect? When you pay tax or on the tax, we call that as cascading effect. This is removed with the help of GST. The model proves to reduce taxpayers' transaction cost by way of simplified tax complaints. Since the tax complaints is easy, it reduces the transaction costs. Increase in the tax collection due to broadening the tax base and compliance improvement. So these are all the benefits that we get with the dual GST model. So let's understand this with a working example. Here, let's take an example where the timber maker, he is making a sale. On his sales, he is collecting GST. Okay, he is making an intrastate transaction where he is supplying within one particular state. Okay, on that sales, both CGST and SGST would be charged. In this case, you can look at the example where he is paying CGST of rupees 10 rupees and SGST of rupees 10 rupees on the sales that he has made. He is selling to the furniture maker. The furniture maker, then he is making his sales to the furniture retailer. In that case, he is paying GST, where this is also within a particular state transaction where SGST and CGST is charged, and he is paying 20 rupees as the GST, of which 10 rupees he can claim as input tax credit from SGST and 10 rupees from CGST. So remaining 10 rupees he would be paying. Okay. and then he is making the furniture retailer, he is selling the product to the final consumer. In such a case, it is also an intrastate transaction where SGST and CGST is charged, and he is charging 30 rupees of GST to SGST and CGST. In that case, he has already paid 20 rupees on his purchases. So in that case, of these 30 rupees, he'll be claiming 20 rupees as input tax credit, and remaining 10 rupees would be paid towards SGST. In the same way, in CGST, he has already paid 20 rupees on his purchases and is selling that to the consumer, and he is getting 30 rupees on a tax on that sales. So in this case, there will be a reduction of 20 rupees from the 30 rupees, and remaining 10 rupees would be paid towards the CGST. Let's understand this where the goods are sold between two states. If the goods are moving from one state within the state, we call it as intrastate transaction, and CGST and SGST would be charged. Here in this example, you can see the goods are sold within Maharashtra, where the good is moving only within Maharashtra. Mr. A is located in Maharashtra and B is also located in Maharashtra. In that case, goods worth of rupees 10,000 is moving between them. In that case, CGST of rupees 900 he is paying and SGST of rupees 900 he is paying. In this case, the SGST would be going to the state of Maharashtra and CGST to the central government. In the next case, you can look, the transaction is between Mr. B and Mr. C. Mr. B is from Maharashtra and Mr. C is from Rajasthan. In that case, when the goods are moving from one particular state to the other state, the IGST would be charged. Why? Because it is an interstate transaction. In such a case, the IGST would be charged by the central government. Now the value of supply between B and C, it is 17,500, of which the IGST chargeable is 3,150. This would be charged by the central government. The charge would be made by the central government. It would be divided to the government of Rajasthan. Why? Because the tax would be divided to the state in which it is consumed. So the consumption state would be receiving the share of SG. The state apportionment would be going to the state government of consumer. Next, Mr. C, he is selling the good to Mr. D, who is in Rajasthan itself. In such a case, it is intrastate transaction, and CGST and SGST would be applicable, where CGST of rupees 2,700 and SGST of rupees 2,700 is charged.